The downsides to SEIS. The United Kingdom Seed Enterprise Investment Scheme, SEIS, is a government-backed initiative designed to promote investment in early-stage and high-risk startups by providing tax incentives to individual investors. While SEIS offers numerous advantages to both investors and entrepreneurs, it is essential to consider its downsides and limitations. In this essay, we will explore some of the key disadvantages associated with the UK SEIS scheme. Limited investment opportunities. One significant drawback of the SEIS scheme is its narrow scope. It is specifically designed for early-stage startups with a limited track record and no more than £150,000 in total funding. This means that investors looking to support more established companies or startups with higher capital requirements are ineligible for SEIS benefits. Consequently, SEIS may not cater to a broad range of investment preferences. High risk and potential for loss. SEIS investments primarily target startups, which are inherently risky ventures. Most startups fail within their first few years of operation, and the chances of losing your entire investment in a SEIS-qualified company are relatively high. While the government provides tax relief to mitigate these risks, investors must still be prepared for the possibility of losing their capital. Illiquidity. Investing in startups through SEIS can lead to illiquid assets. Startups typically require several years to grow and achieve profitability, and even successful ones may not offer quick exits for investors. This means that investors may need to hold their investments for an extended period, potentially tying up their capital for several years without the ability to easily convert it into cash. Compliance and administrative burden. Participating in the SEIS scheme involves significant administrative and compliance requirements. Both investors and entrepreneurs must adhere to strict rules and regulations to qualify for SEIS tax benefits. This can be time-consuming and complex, particularly for individuals unfamiliar with tax codes and investment regulations. Non-compliance could lead to the loss of SEIS benefits or even legal consequences. Limited portfolio diversification. Investing in SEIS-eligible startups may limit an investor's ability to diversify their portfolio effectively. Due to the nature of startups and the SEIS investment restrictions, investors may find it challenging to spread their risk across various asset classes or industries. This lack of diversification can increase an investor's exposure to the risks associated with startup investments. Impact of tax relief clawback. While SEIS offers attractive tax relief benefits, there is a risk of clawback if certain conditions are not met. If the startup fails to meet the SEIS qualifying criteria within 3 years of the investment, or if the investor disposes of their shares too soon, the tax relief can be reclaimed by Revenue and Customs, HMRC. This adds an element of uncertainty to the tax benefits associated with SEIS. Difficulty in identifying promising startups. Identifying promising startups that are eligible for SEIS can be a challenging task. Investors need to conduct thorough due diligence to assess the potential of the company, the management team, and the market opportunity. For inexperienced investors, this can be a daunting and risky process, potentially leading to poor investment decisions. In conclusion, while the UK SEIS scheme offers several advantages for investors seeking to support early-stage startups, it is essential to consider its downsides and limitations. These include limited investment opportunities, high risk, illiquidity, compliance burdens, limited portfolio diversification, potential tax relief clawback, and the challenge of identifying promising startups. Investors should carefully weigh these factors and seek professional advice before participating in the SEIS scheme to ensure it aligns with their investment goals and risk tolerance.